journey so far and the future of the co-lending. And along with me, we have veteran of the industry, the bankers, TFI, NBFC veteran. Those are practicing co-lending all in and out. So we have Mr. Vinay Bhatt, who is the GM of Karnataka Bank. And in spite of his election in Karnataka holiday, and he's with us. So thank you very much, Bhatt sir, for sparing time for us for this program. Then we have Mr. Praveen Kini sir, who is the General Manager, Central Bank of India. And he is with us. And you know, the Central Bank India is doing co-lending in a big way. So Praveen ji, thank you very much for joining with us. And then we have Mr. Dinesh Sharma ji, Dinesh ji, who is the DGM of SIDBI co-lending. So Dinesh ji, I'd like to welcome you and thank you very much this webinar. Uh,
Thank you, sir. Thank you.
Good to know that the DFI has also started co-lending. Thank you very much. Then we have Mr. Ramandeep Gill, who is the CFO of Muthoot Capital Services. He joined from Cochin actually, and still I think Cochin the elections are there. But he has come for this, I think, webinar and he is with us. So thank you, Ramandeep ji, for joining with us also. And so, friends, this co-lending, I think we have seen in last 4 or 5 years, a lot of newspaper articles are there, lot of discussions are there across regulator or the banks or NBFCs. But we would like to we'll discuss today that what is co-lending and basically what has happened till now, what are the opportunities in that, what are the challenges are there in the co-lending also. And hopefully this will be helpful to all of you to know more about the co-lending aspect. And I think many of the NBFCs, many of the banks are joining us, the audience, and they will get the more learning about co-lending. And I hope that I will be in a position to justify my role as moderator in this program if I could get more and more from my speakers or the panel speakers. So, and I would like to take the questions from the audience also so that they can also ask the questions about any doubt which they have about co-lending or any discussion which we have here. And if any question will be unaddressed, we will try to cover up or we'll try to send you through email also. So don't worry about that. If the questions will be more, we will definitely reply later on to you basically. So, friends, I have prepared a small PPT which I would like to run so that you just know that the what is the co-lending or what has happened till now. Then we will invite our speakers one by one. Devesh, can you just start the PPT? So, next slide. So, co-lending milestone, if we see, I think this seed was, I think this starting was there in the 2018 September when the RBI has issued the co-origination loan scheme. And uh, after that, uh, for next 2 years, the COVID was there and all, nothing has happened. Then the new model came in the picture when the RBI came out with the new circular in the November 2020, precisely on 5th November 2020. And the name has changed of this scheme from co-origination to co-lending actually, and which is prevalent as of today actually. And if we see journey so far, actually we have reached uh, 1 lakh crore of AUM under co-lending model. This is a number which we have basically got from the media, and there is there are many players who have already joined in the co-lending and they have done the co-lending. So 1 lakh crore number is a very attractive number which we have reached already. Just to tell you that in March 2023, this number was 25,000 crore actually. So it has multiplied from 25 lakh crore to 25,000 crore to 1 lakh crore. So we have reached to 1 lakh crore. So it's a 4 times of the 25,000 crore. So growth has multiplied actually. And next slide. So if we see that there are three things of co-lending actually, three major areas are there of co-lending. The one is the co-lending product, co-lending policy, and co-lending model actually. These uh, three basic, I think, ingredients or part of the co-lending are there. So one is that co-lending product actually. What are the co-lending product actually? Co-lending product we call the underlying asset which we are creating under the co-lending model actually. So if we understand the simple terms, whenever we are doing co-lending, there should be some category of loan actually. So like either it's a MSME loan or it's a housing loan or it may be education loan, gold loan, whatever maybe the loan product is there to be called co-lending product actually. And then a co-lending policy. So as per RBI guidelines or regulator direction, both the partner in the co-lending, the whether bank or NBFC or NBFC to NBFC, they should have the policy in place. So they have to define that what will be the policy for co-lending whenever they are partnering with each other. So the co-lending policy is one of the important document which anybody want to enter into a co-lending, they should read this policy and understand what are the areas in the co-lending policy which will help you to know the intention of the organization and the thought process of the organization with whom you are doing co-lending. Then the co-lending model. So as per the regulatory guidelines, there are two models under co-lending where the banks and NBFC or NBFC to NBFC partner with both of them. One is the CLM1 model, co-lending 1, and then another co-lending 2 model, what we call direct lending or maybe the assignment model. So under model 1, there are the process where both banks and NBFC are joining hands and they are disbursing to the borrower. The loan is disbursed to the borrower on the real time basis or on the basically simultaneously. In case of I'm giving just basic example so that it can be understood well. And on the second model, we called it the assignment model or DA model, where the NBFC will generate the portfolio or will generate the asset in the manner where the policy has been decided by both the partners. And then later on, they will assign this portfolio to the major lender who is partner with them. So that it's a post disbursement, the portfolio will be given to the partner. In case of model 1, this will be done simultaneously. Next. So these are the steps which are involved in co-lending. So first of all, the policy finalization by bank and NBFC both on the co-lending side. Once the policy is finalized, then the identification of your larger partner who is the major partner, and the major partner will basically do the due diligence and the other processes also. Then the finalization of once the processes are set, then the master agreement will be signed. We call the co-lending master agreement, which is very important document where all the terms are there. Then the pricing and commercials, although the pricing and commercials will be finalized before the master agreement, but it can be simultaneously also. And the technology is one of the important aspects of co-lending. And so both the partners will decide what should be the technology and who will be the technology partner and how it will be integrated between both the partners. And then both the partners have to open the escrow account as per the regulatory requirement. I will not go in detail because the escrow accounts are required. 3 escrow accounts are required and all, which we will discuss with our panel speakers. So this is a simple process. 5-6 steps are there for becoming ready as a co-lending partner with the other partner actually. These steps are important. Without these steps, you cannot go for co-lending partnerships. Next. The product which I was just discussing. So there are products which are priority sector or non-priority sector. So as of today, some banks are doing co-lending under priority sector only. Some banks are interested to do the co-lending under non-priority sector also. So the products are the agriculture loans or MSME, gold loan, housing loan, vehicle finance. These are general products which are coming under the priority sector. Even unsecured business loan is also part of the priority sector. Then the personal loan, gold loan, education loan, these are non-priority loans basically. So depend on the NBFC, NBFC to NBFC on which product they want to partner, and bank to bank also on which product they want to partner with their other NBFCs. Next. this is a very important slide actually to understand by everybody that what are the advantages of co-lending to all the stakeholders. So in co-lending, there are three stakeholders majorly. One is banks and the NBFCs and the consumer or the borrower. So if you see from the bank's point of view, it is a win-win proposition for banks where banks can grow the retail book. The retail growth can be very, very fast. Then the reach, because NBFCs are working in deeper areas also. So the reach with the NBFCs partnerships, their reach will increase also. Operational cost, practically the all cost is borne by the NBFCs in case of co-lending partnerships. So practically this operational cost is very, very low. Better collection efficiency. If we see the collection chart of the banks, I think the portfolio which they are partnering with the NBFCs, the NBFCs are in a better position to showcase the collection efficiency, overall collection efficiency. Then the risk management, again, but they have one more partner in between who is also engaged in the underwriting, and also the risk management can be better. Then diversification. Many of the banks which are not into the different kind of portfolios, through a co-lending, they can diversify in the various different products on the loan side. Then our PSL. So PSL is one of the major area for many banks which are not beating out every year. So through co-lending, I think they can easily achieve the PSL targets also, priority sector lending targets. Geographical expansion, definitely, although banks are having reach, but in many geographies, if they are not having strong presence, they can partner with the NBFCs and they can increase your reach also. Cherry picking also, because when they are partnering with the NBFCs, they have this option to cherry pick the proposals or the loans which they want to do the co-lending model. Although it is derived by the policy, but they have this option which are to be accepted, which are not to be accepted. Then the NBFC, from the NBFC point of view, you'll see that they have this advantage of faster growth, the low interest rate also, because when they are partnering, definitely the cost of interest which they are paying on their borrowing and the partnering with the co-lending. Credibility, the bank is partner with them, so definitely it's a great advantage in credibility. Then the customer base, they can diversify their customer base also. So there are many advantages sanctioning of the big ticket size loans. So when they are partnering, they can consider disbursement of the larger ticket size loans also. And the capital efficient structure, that's the most important part actually, because capital has its own cost actually, and there is a limitation of capital also. So under co-lending model, it's a most efficient structure where the capital requirement is almost nil on that portfolio which you are giving to the bank actually. Consumer, so unless until the consumer will not be benefited in this, no consumer will be interested to take a loan in the co-lending model. So so from the consumer point of view, low interest rate is one of the area where they are getting advantage. Single point of contact, they are not required to go to the bank again and the or the NBFC both basically. So they can take the advantage of both the partners at one point of contact actually. And because these consumers are mainly the small borrowers, so sometimes they are hesitating to go to the bank and all. They are not understanding the complete processes of banks also. So NBFCs are having the doorstep delivery model, so this can be an advantage to them. And then they can build up their history with the banks also through that co-lending model. That major advantage of the consumer is that their history is building up while they are not directly interacting with the banks, but their credit history is building up with the banks. Next slide. Concerns of when the benefits are there are a lot of concerns are there basically, so which are addressing by the ecosystem players. But we thought let us just discuss on the concerns also. There are the customer service and grievance redressal and all these things are there. Although it's a new baby, the system, the co-lending, but these issues will come which need to be, I think, taken care well in advance. Then the mortgage and charge creation, I think this issue has already been settled now. Initially, this was an issue. And then the underwriting process, credit appraisal, sanction letter. So these are some of the concerns which have been sorted out by many banks, but still they are out in the mind of the NBFC, which we'll try to discuss in our discussion. Next. So these are the some of the top five banks as of today which are actively doing co-lending. So Central Bank of India, the top of the all, I think banks in the country as of today in terms of overall tie-ups and the overall volume which they have done. Then State Bank of India, which is the largest bank of the country, Bank of Baroda, Bank of India, and Axis Bank. Then many other banks. We have just taken 5, 6 names here, but almost all the banks are doing co-lending nowadays. Next. These are some of the broad criteria on the co-lending policy point of view of the bank. So I think the rating is one of the major criteria whenever any bank is choosing the partner, NBFC partner. So there, I think thought process is that there should be some vintage or some, I think, some credit rating of that NBFC. Most of the banks are more comfortable on the A and above rating. Some of the banks have considered triple B also in their policy. So this can be helpful to the small NBFC also. And then they have this major criteria in terms of NPA level should not be, GNPA should not be more than 5% or NPA. So this is just a benchmark, but it will be, it will be differ from bank to NBFC, bank to bank actually. And the vintage minimum. So at least whenever any co-partner is coming, this partner should have at least 3 years of journey in their the entire organization, so that they should have some kind of history also. Next. So as I already discussed, the why should an NBFC should partner with the bank for co-lending and the profitability. So this is an area where you can maintain your profitability, your bottom line will remain healthy, while you are not have any challenge of the long-term ALM or ALM issues actually. So you can do the long-term funding to your borrower, but there will not be. So in case of long-term lending to the housing loan or MSME LAP loan, this tenure are very long actually, 10 to 15 years. When we are going to the banks for your borrowing, I think the banks are not considering for 10 years, 15 years loan. So through co-lending, this issue can be addressed where the ALM mismatch will not be there while you are getting this advantage. And this capital, because it is a major advantage where the capital will not be basically required for the co-lending portion actually. So this is another advantage to you where you can conserve your capital also, which is the most precious commodity in the NBFC space. And optimum utilization of your resources. So you have infrastructure which can be optimally utilized by way of co-lending. Then the availability of funds and resources. So in case of you are borrowing from a bank, there are exposure norms, there are ceilings from the regulator point of view also. But in case of co-lending, if they are having trust with you, they have confidence on you, then the availability of funds will not be an issue. That's the co-lending model actually. Next. So these are some of the commercial related areas basically which need to be addressed before partnering in the co-lending space. So interest rate, what will be the interest rate to the borrower and the between both the NBFC to banks and NBFC. Processing fee, who will get how much processing fee, foreclosure fees, penalty charges. These are basically all commercial related charges which need to be decided in advance so that there should not be any issue later on between both banks and NBFCs. Next. So future growth, I think we look for as Resurgent India. We are basically partnering with many banks and NBFC intermediary where we are seeing a very good future because it's a win-win for all the stakeholders, whether it's a bank, NBFC, or the customer. So as you already seen that 1 lakh crore number has already been achieved, and with the fintech growth and MSME growth in the country, we believe that this 5 lakh crore number can be achieved in next 4 years. So 1 lakh to 5 lakh, we are taking the target of 4 years. This is a Resurgent India thought process estimation, keeping in mind the current momentum in the country and the co-lending space. I believe this 4 years will not take, actually, it may be achieved within 3 years also. And we are hoping that there will be a 50-60% growth on the year-on-year growth in the co-lending market in next 3 to 4 years. That is our estimation, but definitely we will listen from our panel speakers what they think also. Next. So how we can achieve the co-lending basically. So ease of technology, I think technology is the major I think hurdle in this current situation. more and more banks will do the co-lending, and then NBFC to NBFC will also increase that co-lending partnerships also. So we hope that with these three, I think areas will be improved. I think the co-lending number which we are thinking 4 lakh crore will not be a big problem or will not be any challenge also. Next. So thank you, Devesh. So sir, this is about the co-lending which we think of, and we just try to cover up so that we can set the tone of the discussion. Now, I would like to invite our panel speaker. So we have Mr. Dinesh Kumar Sarmaji, who is the DGM of SIDBI. Dineshji, first of all, I would like to welcome you in this program, and thank you very much with us. So Dineshji is having very good experience. And he has more than 15 years of experience in SIDBI, and he the in charge of the co-lending. So Dineshji, we would like to understand from you how the SIDBI is doing co-lending partnerships. How you come at, you are a DFI, Development Financial Institution. I think most of the banks are there in the co-lending model, but being DFI, how you are doing the co-lending and how it is different from bank also. And then we would like to understand from you the first part of the co-lending is the onboarding of the partner actually, where there are expectation between both the partners. So how you are basically what are your views on the onboarding of the partner? What should be the steps which should be covered, and what should be precautions which should be taken also, and how this the partnering will be there when the technology is also there actually, and how the technology is playing the role in the onboarding of the partner of the on the entire process of co-lending. So Dineshji, over to you, and thank you very much.
Yeah, thank you, Ashishji, and good afternoon, everyone. And thank you, Resurgent India, for giving this opportunity to speak on this topic. Ashishji, from SIDBI perspective, we are DFI, but you me knowing that we are into MSME lending also. So we are directly lending to MSMEs, and the co-lending which is being done by SIDBI is similar to the commercial banks, and all banks are doing the co-lending. So there's no different process or different things which we are doing at SIDBI. SIDBI, we started co-lending in December 22, and initially we focused on the technological this part, how this can be routed through the technological middleware platform and these things, and we worked for 5 to 6 months on that. And last 6 months, it has started picking up the business. SIDBI, we are doing the co-lending under both unsecured and secured product. So unsecured business loan, and under the secured loans includes the loan against property, lab, machinery loan, commercial vehicle loans, all these things. When you're talking about the onboarding of these NBFC, so you would see in all the banks, the bank have fixed the partner screening criteria. So when any NBFC is approaching to the bank, first they will have to comply with the screening criteria of the bank. So at SIDBI also, we have fixed the screening criteria based upon the external rating of the NBFC, the GNPA, net NPA, the vintage of the NBFC's CRAR norm, and some cap. We also kept the on the their limit. The limit will be decided based upon the rating and their AUM, and what is the portfolio size under any specific product. So suppose I'm doing the co-lending under the LAP or under machinery loan or under commercial vehicle, so I will see the portfolio of the NBFC at what level that portfolio is there, and what is their expertise. So it will give some comfort to the bank that if you have built up the sizable portfolio under a particular product, so bank will get the comfort that you have enough experience of handling that portfolio. So in that way, the screening criteria have been fixed. So when the NBFC is approaching to the bank, so first thing they have to understand that the banks are dependent on the NBFC for the entire journey, from origination to monitoring, follow-up, even that recovery, legal action, everything to be done by the NBFC partner. So when any NBFC is coming to me or approach to any other bank, so first they have to satisfy to the bank that how efficient they are in origination process, how is their underwriting process, how are they assessing the repaying capacity of the customers, what is their monitoring and recovery mechanism. It is done through their own staff or they have outsourced these activities. What are their title investigation and the valuation processes, and but how is their audit mechanism, how is their document management policies, how this security is created, whether it is through digital mode or they're executing physical mode. So all these things the bank will be assessing while any NBFC is coming to the bank. So what we are doing at SIDBI, when we receive a proposal, so we'll study all on the any NBFC proposal on these aspects, and we'll have a joint meeting with the all the key managerial person of the NBFC, and we'll understand in detail what are the nitty-gritties of all their processes, this underwriting process, and what are the LOS, LMS, how that loan origination processes is being done under their, and which softwares they are using, which processes they are following for the monitoring, and this monitoring and the payment and collection part, how it is being taken care. So all these things will be taken care and will be seen in the detail. So and then the NBFC is meeting all this criteria, then I have to see the product, the policies and their product parameters also. Suppose any bank is doing the proposing to do the co-lending under the loan against property. So what are the product features of that NBFC? Under which segment is it is dealing? What is the loan size? What is the rate of interest to the customer? And what type of customer it is catering to? Under which geography it is working? So all these things will be seen by the bank, and we'll have to sit together, banks and NBFC, because what will happen when the bank is already into MSME lending, it will have different credit policy. If I'm originating the this cases, I'll have the different credit policy, and when I'm depending to on the NBFCs, so I have to see at what level, to what extent I can go. Suppose you have some the CIBIL criteria, CMR criteria, this FOIL, DSCR, the LTV, all these criteria you will be having. And in the most of the cases, you will find that bank finds that this criteria is beyond the threshold of the banks. So I am accepting at the LTV of 40% or 50% or 60%. In NBFC cases, I will see it is up to 70% or 80%. So this kind of features you will find. So we have to sit together and you have to reach at a conclusion at what threshold limit I can keep and under which segment I can do the co-lending. So I'll request, I suggest to all the NBFCs what they should do actually. Nobody needs to change their policies actually, because banks should not insist that they ask NBFCs that you change your process because as per my policy I am doing this, so you should also do this, because NBFCs, they have developed their expertise in that segment, and based on their expertise they have designed the product and policies and their recovery mechanism and all these things. So we should respect them, but you can set the threshold, and you can start with those threshold. You can set a limit, and based upon your experience going forward, you can slightly you can reduce that. You can suppose you are keeping the CMR criteria. Suppose if you have kept 700, based upon your experience of the portfolio, you can slightly reduce. You can go to 675 or 650. This is just an example, and the same thing applicable to the LTV. So on that part, based on your experience in that particular segment, so going forward, you can reduce those criteria and then you increase the limit. So you will get some comfort. Bank will get the comfort that yes, my portfolio is working fine. So this on the product part and this on the NBFC screening criteria. Major thing you talk about the technological part, because what is happening actually on that front, banks since beginning banks and NBFC have faced so many challenges. Industry is expecting a very strong this end-to-end digital platform where all this thing process can be done smoothly, but still some challenges are there. The technology is required because when you are sourcing all the documents and information from the NBFCs and considering the volume of the business and volume of the cases and the post disbursement, the monitoring and reconciliation part is there. So for all these things, the technology plays a very crucial role in that. So initially some challenges were there, but the necessity is the mother of invention. So so many fintechs have emerged in the market, and as of now you see so many fintechs are there which are providing the solutions, and gradually this a lot many enhancement and upgradation as based upon the experiences these are being done. So initially challenges were there, but from the present perspective, if I talk, to the great extent, the issues have been addressed by so many fintechs, and the things are moving in a good direction. So that is on the technological part, because it is very important when you're entering into co-lending agreement from the benefit of both banks and from the NBFC front. And in the long-term perspective, it will be very important that you decide under which this model or under which what will be the technology intervention which will be used under your co-lending partnership. So then this will be a very smooth process. So that's from my side.
Thank you, Dinesh ji. Thank you very much. You have given very elaborative, I think, idea about the onboarding and technology also. So one thing which has come out from your deliberation is that the NBFC changing of policy by NBFC according to the bank policy, I think it might be a difficult situation. So the banks have to see that they put their confidence in that policy. They have to, I think, see from the 360-degree point of view whether this is in favor of the bank or not. Actually, then they can decide to go further. Otherwise, it can be a roadblock for partnering in the co-lending. Actually, so this is one good aspect which you have given. Other than that, also there are many things which are coming out with your discussion, but we'll come on later on these points actually. But thank you very much for covering in a detailed manner about the onboarding process of NBFC. So generally, how much time it will take to onboard one NBFC the co-lending model?
So I can say 3 to 4 weeks will be sufficient, because if you start processing this interaction part and due diligence part considering together, so 3 to 4 weeks are sufficient in that you can, because this involve your finalization of the product also, and this technological this intervention, and if you are deciding on all these parts, so the onboarding should not take more than 3 to 4 weeks.
Okay,
you can say.
Great, sir. Thank you, sir. Thank you, Dinesh, sir.
Thank you.
Friends, now we have another senior banker with us, Vinay Bhatji. He has very good experience. He's the general manager of Karnataka Bank, based out of Bangalore. So, sir, first of all, I'd like to welcome you in this webinar. And so we would like to understand from you because Dinesh has covered on the onboarding part, a little bit on technology, but the policy and process alignment. One thing he has given the very good tagline that the banks have to change themselves, or we have to, I think, adopt the NBFC policy. So being a senior banker and from your bank point of view, like to understand, first of all, what where the Karnataka Bank is there in that co-lending piece actually. Are you very active player, or you want to see the market that you are passive player, or you want to go very fast? So that's the one thing which you like to understand. Then the policy and process alignment between banks and NBFC. What are the challenges? What are the areas which need to be covered before going for the partnership? Over to you, sir. Sir, you are on mute, sir.
Thank you very much, Ashish, for giving me an opportunity in this forum today. So from Karnataka Bank, we have been in this journey. We enabled our policy, which is the first thing which a bank has to do, that the bank's lending policy need to be enabled to make it viable for the bank through the directions of the board to enter into the co-lending area. So we had this co-lending policy amendment into our master credit policy for about 2 years back. And then we seriously started pursuing the co-lending partnerships for about almost an year ago. On today's date, I can say that we are live with about 4 partners, and we are in the process of integrating with about 3 partners. So overall, our relationship today is on the table with about 7 partners and on discussional stage with another 2 or 3 partners. So this gave us a very good insight into the co-lending methodologies, and also what are the enablers which a system need to put in place when we come towards the journey on co-lending. So we started initially in, as rightly told by Mr. Dinesh, in the initial stages, we tried to bring the NBFC books also to near term with our policies and procedures. Then we understood that if we are trying to do that, then we are not only crippling that process, but we are also impending or bringing roadblocks on the NBFC's journey. So that was the first realization we had when we were adjusting our policies or the processes in order to have ourselves having a visibility into the co-lending. Then slowly and steadily, we started interacting with the various teams of our partners at the early stage, and we aligned our policies as a separate co-lending program, which is being defined by the overall master policy of the bank. But each co-lending, be it a financial inclusion plan with an agriculture or an MFI based institution, or be it an MSME institution, NBFC institution where we'll be looking at an MSME side, or even to a certain extent when it comes to some of the organizations or NBFCs where we are tying up on the personal loan side. So when we look at all these different NBFCs who are having a focused areas, focused pattern, focused structure, focused policies, as well as focused attention on specific lines of businesses, we started adopting a separate program. For example, under the master policy, which is enabling for a co-lending, taking cognizance of the board, having a separate setup, a separate approving authorities, through we have cross-functional leaders being a part of that, and then each of these program which is enabled with each NBFC, that program which is having all those aspects which Mr. Dinesh has told, what is the gating criteria which you would have, how much CIBIL we have to take, what are the FOIR we should be looking at, what are the basic criteria we look, how is it getting assessed, what is the CAM sheet which we will look at, what is the income criteria we have to look into, that we look into each NBFC as an each program, approve it within this cross-functional teams under the master policy, and bring out the policy first. So now once we have a master policy in the bank, and then a program which is being derived out of each of the NBFC's principles and procedures under the policy structure, we now have a program which is ready. Next process is the most important, where we integrate. So when I say a process, the process consists of creation of a policy, first of all identifying the product, creation of a policy, creation of a program, and then bringing it into a process stage where we implement this procedure or the policy which we have into a end-to-end process with the NBFC, where the NBFC originates, the portion gets allocated, the processes which is required, and then to the end how the collection happens. Now this is a big challenge here, because as I told you, we will have a gating criteria, we will have a policy, but when we come towards the processes, we have seen that there are multiple different ways in which various NBFCs or the MFIs do. I will give an example just to have an understanding in this. The MFIs do if there is a fixed EMI. When it comes to a delayed EMI, MFIs don't charge the normal interest which is required on the principal portion of the EMI. But banks, when there is a delay in the EMI, actually the principal portion, the interest is getting charged, or there is a penal interest which is being charged. So now this is a change, because in my systems, in my policies, in my procedures, in my technology, which supports to a calculation of interest in this way, but whereas when this co-lending program comes in, only for this co-lending assets which is sitting inside my my CBS or the separate CBS which I am forming, how this interest portion calculation need to be realigned. Whether we should be agreeing to the MFI part or the MFI process of collection of the interest, or we have to have the MFI to get for this particular program adjusted to our computation of interest. So the processes which we have, not only this, the collection also. When it comes to the collection, there is a way in which we adjust the amount which is being collected, a portion to the principal and portion to the interest. But when it comes to some of these NBFC partners, even the adjustments which is coming in, there is a separate method which we do. The principal comes down very fast and the interest accrual happens. So now at any point of time, if we try to reconcile these accounts, it becomes a difficulty. So defining the process where we need to align, how we need to align, whether we need to have a manual intervention, whether we need to take it through the technology interferences, whether we need to have some simple solutions which is required, which is coming out of both the policies but is a different one. So the process set up in this whole thing, that takes a lot of time. Now, see, this is difficult. I do understand, we do recognize, but how we can come out of this? What we did was that we created smaller groups. So every point we created cross-functional teams. There is a cross-functional team at the top, and down the line, when it comes to reconciliation, there is a separate team. When it comes to the technology, there is a separate team. When it comes to the assurances and the governance part, there is a separate team. And all these teams converges at least once and twice when we progresses at the early stage, and when we come towards the end, it becomes on a daily huddles. So unless otherwise we have continuous interaction, we have an open mind, because many times I have seen that at the banking side, at the back end, there is a resistance when it comes to when we adopt to the NBFC policies, because we are all having a separate risk perception. We are not attuned to the risk perception which an NBFC is having. NBFC having a different risk perception because they have got capabilities to handle the stress which is coming out of a portfolio. They have the capabilities to understand the portfolio. They have the capabilities to onboard a specific portfolio. But as a universal bank, many times we have resistance at our side to adopt those policies and adopt those procedures. So it is very important in any relationship under co-lending to be successful, that at the initial stage, and Mr. Dinesh told, we need to recognize the partner well and with very strictures or very good structures. And then we need to have a understanding, a discussion, continuous interaction with them till the implementation process is happening. Having a proper policy which is binding the principles, having a proper procedure which is binding the policy, and having a proper process which is binding the procedure. When we are stitching all this together, sitting opposite the tables with the NBFC, the co-lending process which is there today is going to become one of the future of the banking industry. There is no doubt about it, because there are a lot of synergies. There are a lot of uses which already being very clearly told by Mr. Ashish in the beginning, that what are the benefits for the teams which is involved in it, what are the benefits for the groups which is involved in it. So absolutely, there is a great future, but there are also teething issues, especially on the technology. We don't have a proper technology today. Many of the NBFCs want direct integration. Banks don't have that bandwidth. Many of the NBFCs will go for a middleware, but banks will have a separate middleware. Many of the NBFCs go for the same middleware and the banks going for the same middleware, but the middleware does not have the capacity to run this through. So having a good technology, having a proper process, building in on a good policy, 100% I'm sure, as far as the NBFCs and the bank is concerned, co-lending is going to be a viable proposition, not only for the financial institutions, but also for the end user. So absolutely, we are gung-ho, sir. As you told us, you asked me the question that, are you going slow? Are you going fast? Absolutely, we are going on a medium pace, fast nor slow. We are already having tie-ups about, as I told you, about 5 and another 3 on hold. So obviously towards this financial year end, you can see the Karnataka Bank name among the 5 names which you have put as one of the leading player in this particular field. Thank you very much, and over to Mr. Ashish.
Great, sir. Thank you so much. I think so you are progressing very well. And then one message which you have given, that understood the partner very well, actually. That is more important. I think that's the crux of co-lending is that once you understood your partner, I think, and their expectations also, and the continuous interaction. I think these 3 things, if can be done, I think the co-lending can be a great success also. And
Yes.
you have given the examples also. That's great, actually, because these are the teething problems which are coming, that how to book the interest, how to charge the penalty, delays, and all, basically. But it is facing everywhere, actually. And the lastly, which you had told, technology. So some of the banks have sorted out the technology. Some of them are struggling. But still, technology is a challenge, the overall co-lending model, actually. So thank you very much for your feedback and the deliberation also. Thank you, sir. So friends, now we have Mr. Ramandeep Gilji. Ramandeep is the CFO of Muthoot Capital Services, which is a Muthoot Group company, flagship leading company in the Muthoot Group, actually. So Ramandeep ji, first of all, thank you very much, and I would like to welcome you in this webinar. And I think in your state also there is election, but still you are there in the office for us, actually. So thank you very much. So Ramandeep ji, because you are one on NBFC only in this panel, actually, all our banks. So I think this is, you have great responsibility on your soldier to speak from the NBFC side. One. And then the new thing, or maybe I think it's not a new thing, which is happening in the last many years also, this NBFC to NBFC co-lending. So how do you see this aspect? Because as I understood that Muthoot is doing partnerships with the NBFCs, where because banks have their own criteria, as I've shown in the my slide also. Most of them are considering A-rated companies with that minimum portfolio size and all. But I believe that in case of NBFC to NBFC, this will not be a challenge. So how the small NBFC will be in a better position to partner with you and all. So we would like to understand from you. One is that the Muthoot Capital Services, how you are partnering with the NBFC in the co-lending. Another is basically the monitoring and collection, because this is the important piece of the entire co-lending model also. So what are the challenges, or what are the areas which are having concern in the monitoring and collection? If you can cover up also, because you are very experienced, very much experienced working in the NBFC space. So that will be helpful. So over to you, Ramanji.
Thank you so much, Ashishji. Very good afternoon to everyone, to all the listeners. So I would like to start with that where we are, where Muthoot Capital as a part of MPG Group, where we stand as of now. No, so the thought of entering the co-lending space, it came approximately 18 months ago, wherein we thought, yes, let's enter into this space and try, what we can in terms of engaging with the small NBFCs. Specifically, we have chose the portfolio of two-wheeler at that point of time. Gradually, we moved into the used car, and then recently we have introduced our co-lending partners with CV also, commercial vehicles. The intent is again to grow, diversify, and wherever we can, because in co-lending we do have various range. People engage in two-wheeler. In two-wheeler, there are player who only does new two-wheeler. Then there are player who only does used two-wheeler. Then there is a third segment called EV. So we just want every partner, to be unique into their range, and to possess a geographical expertise with them. We chose partners across Pan India in order to explore various geographies and take the expertise which that particular NBFC possess. Till now, we have been able to onboard 8 co-lending partners, and we have been able to build a whopping co-lending portfolio of 800 crores as we speak, wherein in each of the NBFC we are a principal partner, wherein we are providing 80% of our capital to them. Right now, we're in the process of developing, and in the process of onboarding 3 more clients, 3 more NBFCs, wherein we know that because initially we found, yes, there was an issue in terms of tech, in terms of onboardings, in terms of opening of escrow accounts and all those processes. the major thing is whenever we onboard any sort of NBFC, whether it is a small NBFC or a mid-sized NBFC, because idea is to have a win-win situation for both of us. Because the kind of yield which a new two-wheeler will give vis-a-vis the kind of yield which a used two-wheeler will give or a used car will give, there are a lot of things, wherein we need to take it, that is with this yield, whether this NBFC is able to operate in market or not. All our players, wherein we have entered into the co-lending partnerships, they are having market experience of approximately 40 odd years, wherein they have their own dealerships, or they have started their own NBFCs, or they have worked with various sectors of the bank under various locations. So this helped us, in understanding the process. And when, as I said, going to pan India without burning the cash, because we have utilized their expertise. Yes, the overall yield for our principal partners becomes lower, but yes, the chances of burning the cash will almost become zero in these stages. So now, then we started about, what is the business plan, what kind of, equity partners which these NBFCs are having, how they are going to perform in last 5 years, what they have done in previous 3 years, what is the mechanism which they have followed post COVID, and what sort of growth in which they are. Then we have been able to see, yes, these NBFCs are there. Yes, their rating is low as of now. Their portfolio might be low, but yes, they are on a verge of growth from last 2 years. And in our segment, we have been able to see seasoning as well. Since all this, two-wheelers, four-wheeler, they are approximately for 2 years or 3 year time period they have. So we have been able to see one seasoning as well. Yes, these partners are there who've been able to do seasoning, and with that, the confidence has been built up. Yes, these players are there, wherein in terms of backing up, if there is something is required, and these partners have already been backed by large PE based firms, which are somewhere which are impact funds, somewhere which are non-impact but yes, profitable firms. So this helped us in analyzing the partners. Yes, and then tech plays a very important role in this, in developing these synergies among them. We have built our own system wherein our own API integrations have been built, and we have been able to do go live with any of our co-lending partner with our lowest time period of approximately 6 working days. That is something which we have been able to develop over a period of time. Then there are processes regarding escrow that we have followed and everything. But the most important process wherein I would like to say as an NBFC point of view, that what is my cost of funds when I really go with co-lending process. Whether when I say about cost of fund, is it a cost of funds wherein I will be taking from market? Yes, it will include that, but most importantly, it will also include that what sort of risk, wherein I would be incorporating in my ECL. That yes, this will be the particular cost which would be added to my total cost, and what cost, what kind of OPEX which I will be incurring with a particular partner, and how it will get amortized when I add my partners, so as to give a rate advantage to my existing partners. Over and above, I would also like to see that where is the responsibility of recovery stays, whether it is with me or it's with partner. Then we decide that what sort of margins I can expect from a partner. That is something which ultimately form base of all the conversation. Yes, their business plans are important, their P funding, backups, everything is important, but this plays a very important role. That yes, what sort of expected margins on which as an NBFC I really want to play. Then we started in terms of my repayment strategy, we started a concept. We just divided in, either we can say that as a plain word called repayment reconciliation. No, we have divided this into two parts. It's AUM reconciliation and DPD reconciliation, wherein fortnightly what we have started is that AUM in their books, in their LMS, what sort of AUM that we have as of now, specifically the DPD in their books. Because sometimes we have found that on due dates, we have found that the NBFC is able to pay the entire installment to us, but end of the day, whether they are able to receive it from their own from the client or not. And then bureau reporting will be done by us and from them. And if we do, yes, because since we have received the entire installment from the NBFC, we will be saying, okay, the bureau reporting is right. But that is something wherein DPD reconciliation played a very vital role. Ki yes, in order to assess ki portfolio in our books vis-a-vis the portfolio in their books has to more or less match. Then we started a new thing called reconciliation of our escrow account, that whether any balance which is lying in the escrow accounts should not get unattended at any point of time. Either it has to be adjusted, or a proper due credit has to be provided, or a note to be provided to the client, so that we can easily close our day, week, or fortnightly reconciliation. And as I said, if we go ahead with the installment without reconciliation, this will ultimately invite trouble for the future. Secondly, this is more towards a comforting factor, wherein we can easily say that we do have FLDG, but FLDG will not cover more than 5-6% of your stage 2 assets. Therein you need to know that, because any asset which is still in the stage 1, it has a high chance in order to move into stage 2 and stage 2 and stage 3 and onwards. This is where we need to have a control mechanism in terms of tracking the repayments right at the stage 1, and therein the special audits, or monitoring or visiting the clients, forming part of their forming reconciliation as a part of your regular process. That would become your icing on the cake. And whatever sourcing which you have done in this month, that has to be properly reconciled, and a proper reconciliation records have to be kept as and when required. But as I said, special audit played a very important role for us, wherein every quarter or every 6 months, we start doing the audits of our existing clients. For our new clients, we started doing in every 3 months. That's where they also know that some sort of tracking has been done at their end also, because when there is a psychological advantages also. When auditor will just go there, will spend time over there, he'll be able to understand the entire process over there. So that's my summary towards repayment, the profitability assigning of the client, and how we choose the client in terms of my co-lending.
Thank you, Ramanji. I think very well covered. I think one key thing which you have given, which is message to everybody, that onboarding of the partner within 6 working days. I think that should be the tagline for everybody. How we can come to that level, like we are saying that the loan in 3 minutes actually. So the same thing, the co-lending. I think the people should drive for that. How we can be the efficient enough where we can onboard the partner, not maybe in 6 days, maybe 10 days actually. So that will, I think, speed up the process. But definitely, every partner has their own challenges, own processes, hierarchy, and all basically. But it's a message to I think, at least in NBFC to NBFC, 6 days is a good this thing. But maybe in the bank case, it may take some more time. So that's good. And then the AUM reconciliation, DPD reconciliation, escrow account reconciliation. I think banks must be doing it. I think we have senior bankers also, so they must be doing the same thing also. But definitely, it's again area where this collection and monitoring, this is a very important part actually, which need to be taken care well in advance. Otherwise, there may be chaos later on actually. So this will be helpful. So thank you very much, Ramanji, for giving your insights about the NBFC to NBFC lending, which is also very important because you see that there may be 500 top NBFCs in India, but 8,500 are the small NBFCs. Where I think they are not having their, possibility of getting the partnership with the bank as of today. Maybe once they will become large, then they can approach to the banks also. So thank you very much, Ramanji, once again. So friends, now we have Sri Krishna with us, actually Master of Ceremony, Sri Praveen Kiniji, the General Manager of Central Bank of India. Why I've told that Master of Ceremony is Sri Krishna? Because Central Bank has taken the lead in the co-lending space, and which is known to everybody. This is not a new thing which I am telling. They have cracked the code actually how to do it, and they have taken the lead also. So, Praveen sir, first of all, welcome to you, and thank you very much for joining with us. Sir, we like to understand how the central bank could be the head of the all big daddies also, like SBI and HDFC, because they have lot of I think efficiency, lot of manpower also, and larger portfolio. So how the central bank is doing co-lending, and what are your success, and also, and what is the lesson which you have got during this co-lending exercise, which can be helpful to the other partnerships also, and whatever the views have been given by the other partners or other basically panel speakers. If you want to comment on that, you want to cover up whatever the areas are left, that will be great actually, because everybody is waiting to listen to you also. So over to you, sir.
Good evening, Ashish ji, and also a warm welcome to all the eminent panelists on your show today, plus all the listeners who are here. So, from Central Bank of India, my best wishes for all of you for this coming financial year 2024-25. First of all, as you said rightly, yes, Central Bank of India, uh, that privilege we are having right now because we started very early in forging the partnerships of the NBFCs, understanding the intricacies of this co-lending model. And today, I would like to share that we are having 25 NBFC partners, some of them major NBFCs with us, and also we have crossed the landmark of 11,000 crores, and coming year also we have set a very ambitious target of having another 25 NBFCs on our partnership with Central Bank. First of all my eminent panelists who have already specified the product processes, the how to uh, go way forward. I think so. They have covered most of the things. So definitely, as you said rightly, why the central bank could go far ahead. See, as rightly said by some of the panelists, that basically you would have to understand how the NBFCs, each NBFC's model works, and each NBFCs have different products which are uh, even they are doing housing loan, then the method, the surrogacy method, the different methods are there. So the bank in their normal way, they are having their own loan policies. We are having our own means where we'll have to tweak to in line with those NBFCs. And once those NBFCs can match up with that, then naturally it will be much easier for us to do those business for those products for those NBFCs. So unless and until if we do not match up with them, if we do not modify the some of the policies, if we do not understand the model of them, then it will be not that easy for the banks to do the business. Otherwise, there is nothing much more in it. It's only to understand the model of the NBFCs, how they are working. As rightly said, each NBFCs differ from the other in way of their either collection or in their way of doing their businesses. So it's very important to know what is their USP, and accordingly we also try to match up that. And many a times we have seen after forming the partnership also, at times we have to come to change those products or modify those products because we find that it is not going ahead. See, when we start doing the business, it is not immediately that the business with the NBFC starts running. Sometimes it takes 3 to 4 months or sometimes 6 months to stabilize. But once it gets stabilized, so those NBFCs are also aware that now if they are to do that business for that product, so they will also modify accordingly. And once for them also it becomes easier, and then the relationship goes on a next, you can say, the next orbit. So these are the things. So it is not that in the first relation itself that all the things get sorted out. It takes 4 to 6 months, sometimes more. And once that gets stabilizes, then for different products we go ahead accordingly. So basically, as from the Central Bank of India, we are the most, the NBFCs call them that the central bank is like, understanding their policies much better than the other banks. That is the only difference what we could observe. from our side. As far as the for these products are, see, we are majorly handling all the housing loans, then the MSME labs, then also unsecured business loan. Unsecured business loans also, where the Udyam registration is a must. Then as the as the classification, that A is, we are having triple A, we are having double A, we are having A. So all top rated NBFCs are there with us, and those AUMs of those NBFCs are, some are in 10,000, 20,000, 50,000 crores. Some are even in the lower side of 3,000, 2,000 crores also. So they are growing with us, and we definitely feel that in the coming year, with more and more NBFCs joining us, naturally we will scale up to a higher this business for the this. And really, this one model, co-lending model, which is can be, make a big revolution, because please understand, the NBFCs have a far greater reach to the unserved or the underserved sectors of our community, where they go deep, whereas the banks have the funds which can be, they can lend to those NBFCs at a competitive rate. So for them to get more and more business, so it's a win-win situation. And the very basic the concept of supporting the small scale MSMEs will go a long way for the development of our economy. So naturally, this co-lending will be a major factor in the coming period for this relation to forge ahead. uh, from my side, I am okay. If any questions, I am ready to take it.
Great, sir. Thank you very much giving the perspective about the central bank. So you started early, that's why you are ahead in the race actually. So that's good. But whenever somebody is starting early, I think there are challenges also which you must have faced. And you have achieved many milestones also. Many speed breakers must have come in your way basically, which you must have passed on. So if we discuss this today's parlance, what are the roadblocks which you think which may be I think solved? Then the co-lending maybe on the faster mode also, or maybe better whatever it is today. So if we can discuss three four more roadblocks which are there, and from all panel point of view, that will be helpful. But we have some people who are from regulator also, they have joined actually, or maybe some people from the ministry also, because we have invited ministry here also, regulator also. So we are not aware that who has joined. But from the practitioner's point of view, we can, on the daily practice or whatever practicing we are doing, whatever the roadblocks are coming, which can be discussed here also, maybe within 2-3 minutes, it will be helpful. So over to all the panel speakers, or before taking the question from audience, I think we can discuss on that. That will be helpful.
Yeah, one of the roadblocks which I feel is that, see, the team which is being, handling this co-lending model, they, first of all, their concept should be very much clear, and the path for growing in that field. See, they will be the persons who will be instrumental in convincing the top management and the board for, making this policy very much conducive to bring the business. So unless and until that, if they don't do it, it will not be easy. If you go by the bank's standard or the products which are there, and then we expect the NBFC, so naturally those will not work, because NBFC, see, if those were the things, then naturally those customers would not have been going towards NBFC, they would have come in the banking channel directly. So here, that the basic concept itself should be understood, that what we are doing in the normal banking channel and what the NBFCs are routing, it will very, these things, if they can sort it out, I think so that major roadblock can be cleared.
Very good point, sir. It has come out from your heart also, I believe. So basically, this team training, you are saying that team training and team confidence, so which is involved in co-lending, business, their confidence or training is very important, I believe. What you want to say, sir?
Yeah.
I'm just trying to understand that you said that the team which is working on the co-lending from the bank side or the top management both actually should have this alignment that
Exactly. Yeah.
yeah.
See, that's
So
that's what I'm saying. Sometimes, see, here, it was possible that both the sides, my top management and my were on the same page, so that things could be implemented on a faster track. So it is possible somewhere, because my interacting with some of the banks would feel that they say that the to convince the top management of something, they are getting some difficulty, so those products are not being getting pushed. So that is one of the reason, that is the major roadblock what we could observe or what we could see. So here I think so somewhere, if those things, as I told you, unless and until, see, policies ultimately, unless and until it is approved by the board and the top management, then only the down the line they can execute it. Execution will be only on the latter part, but prior to that, those things have to be put in first place to be, that policy has to be framed, which has to be accepted, and which are to be, conducive to the NBFCs. If does
correct.
don't happen, then the business will not flow.
Great, sir. Great point. I think, I think to some extent the central bank did it also. Other banks are also doing it. So, but sir and Ramanji and Dineshji, would you like to comment on that? Any roadblock which you think, and maybe
Yeah.
from regulatory point of view or other point of view?
Yeah. So the point which Sarah's raised just now with reference to the policy, which I told in the initial itself, it's a great challenge for everybody, the alignment of the policies. And number two, again, it is on the integration. Manually, these processes cannot be done. So there has to be an integration, a seamless integration, and there has to be a pakka tag for it. Without a seamless integration technology support, this is not going to be fulfilled. So for me, a greater challenge which I have seen, other than the policy acceptance by the bank side, is the technological integration, because we have seen a lot of roadblocks which is coming up, in a lot of challenges which are coming up because of multiple people being involved. There is an NBFC, then there is an NBFC partner on technology, then there is a bank. Bank has got an internal LOS as well as a CBS, and then there is a middleware which talks between the NBFC middleware and the bank middleware. So multiple systems talking to each other and then coming out a seamless integration, for me, I think has created a lot of challenges in this particular process. Policies and technology.
Technology is one of the major aspects. Right, sir. Dinesh sir and Ramin sir, do you have anything or want to?
Yeah, so Ashish rightly mentioned by Vinayji and Praveen sir, the process alignment and these regulatory part. So what at SIDBI, what we have done actually, what are the regulatory requirements in the CLM, the co-lending circular. You see what is to be done, the consent, explicit consent of the customers, the reporting part and everything, and these for the alignment of policy. So what we have done actually, at the initial stage itself, you should define the roles and responsibility, what will be done by the bank and what will be done by the NBFC and how do it be done. So along with the sanction letter, when we are issuing the LOI, we have enclosed one SOP where we have indicated each and every step from the origination, and we have assumed worst to worst scenario, what will happen if the case is covered under CGTMSE, what will be your roles and responsibility if the account becomes NPA, and what will be your roles, and how the recovery will be done. So everything, every step you should define that this will be done by you, this will be done by me, and this will be done in that fashion. So then only we will reach at the conclusion, and when we start, when enter into agreement and then enter into arrangement, then things will be smooth. Now that will be decided how the bank will be doing and how the NBFC will be doing. But at the conclusion, we should reach this process we have to follow, and this is to be taken care at your end, and this will be taken care at my end. Even in the order of appropriation also, we have defined our LOI. This will be the order of appropriation will be following. So if any tweak or anything to be done with your system, if anything has to be taken care at my levels, I will be taking care of those parts, you will be taking care of those parts. But one conclusion should be there This will be the order of appropriation. If the part amount is received, they will be appropriated in that way. Full amount, there is no issue. So that is the one solution which I think all should work on it.
Okay.
Reach at
I
the
think
conclusion.
yeah, SOP is one of the area which I think it should be decided. Good, sir. Good. Ramanji,
So from NBFC point of view, yes, I can see that there is a pain which, wherein bank and NBFC, work together, and, how they have been able to face some sort of issues and all. From NBFC point of view, yes, there are some sort of operational issues or blocks, which we can easily resolve. But yet, if we are able to get more clarity, because we don't find NBFC to NBFC doing CLM2 more often because of lack of clarity or lack of SOPs. If this clarity can be provided more into the SOPs, that would be, best. Otherwise, we are finding good to go in terms of CLM1 from NBFCs to NBFCs.
okay. So NBFC to NBFC, CLM can be done or not done. Actually, there is a ambiguity as of today, which can be okay. That's a good thing. I think hopefully your message will go to the regulator. I think they will decide. You will get something. So great. I think that's a good discussion which we had. There are some questions which we have from the audience. So one question is that co-lending meaning is the same as consortium lending. So anybody would like to take? I think it's not a consortium lending actually. No?
The consortium, it is not consortium lending. Actually, in consortium, the lead bank concept is there. One will be the lead bank, other will be the partner in that thing. Everything will be taken care by the consortium partner, consortium lead. Here is a partnership arrangement. So the roles and responsibilities are defined. What is to be done by me and what is to be done by you. So in the consortium, there is a separate regulatory guidelines by the RBI. In the co-lending, there are separate guidelines. So that from that perspective, both are that if you see in the model kind of thing, you can say there also the joint financing kind of thing. Here also the joint financing kind of thing. But there's some system and procedure are different in both the models.
Okay, so it's not a consortium; it's a co-lending or co-financing actually. Right. I got your point. So somebody has asked that what about the BBB rated NBFC? So I think you want to cover up, or otherwise the policies where anybody can see the policy of the different banks. Any bank doing BBB, I think they can approach to them. Or anything you would like to add, sir?
Yeah, at SIDBI we are allowing up to BBB actually.
Okay, you have allowed this. You are doing it. Okay.
Yeah, our minimum rating is BBB.
Okay, got it. So depend on bank to bank actually, bank risk appetite also. So I think if anybody would ask this question, you have to see the policy of the bank and then accordingly you have to approach them also basically. So it depends on that also. And somebody has written that escrow account is one of the pain area actually where still the alignments are not there actually. Still do you think, sir, that there is a big challenge in the escrow account, or the going smooth everywhere? Escrow account arrangement.
I don't
You are
think so,
asking
sir.
me?
Yeah, in terms of, when we are doing, see, escrow account will remain the same, whether in terms of NBFC or bank. I don't think so there is any issue as of now, because in last 4 or 5 co-lending partners, wherever we have been, try to reconcile or everything, there in escrow account, there are two names which have been assigned. One to a primary partner, second to, partner who is basically originator for us. There in view access, transaction rights have been provided. So we never faced any such issue in terms of escrow account. So I would like to, see answer of other panelists also, that what sort of issues which might come in escrow account.
No, I also agree, Raman, because I don't think that there is any major issues as of now, because it's a system-based escrow account.
Yeah.
Banks already have escrow mechanism for RERA accounts, many other sort of accounts. So there is absolutely no issue. There is an escrow manager who will be specifically assigned for the escrow accounts. And then there may be some process issues which somebody might have encountered with some of the financial institution. But we all have a specific SOP, specific process for the escrow mechanism. So I don't think that there is any issue.
Okay,
Thanks.
Great, sir. Great. So good. I think I believe we had a good discussion, and it will be helpful to all the people who have joined with us, or on the social media, because this will be available on the social media. So anybody want to refer it later on, they can refer it also. And I would like to thank you to my panel speakers for their time, valuable time, and their deliberation, their viewpoints also. And I think I believe that everybody has spoken frankly. Nobody has tried to hide the things. Actually, that's a good part of this discussion. So this will be helpful to everybody. And there are 2-3 things which have come out very well from this discussion. That I think the adoption of the policy of NBFC, if you want to be successful in the co-lending model, this is a very, very important part. Otherwise, there can be a I think partnership, but it might not go further. Then the continuous interaction with your partner. I think it's not one-time job where you have signed the agreement and then you left them alone. Actually, so continuous partnerships or continuous interaction on both the sides is important. Then the Ramanji has told that the TET is 6 working days. So this is I think a lesson for everybody, because as Research India we are also involved in this process where we are in between of both the partners, but we have not seen the 6-day TET till now actually. So this is I think learning for us also. If this can be a 10 days or 15 days TET, I think this number will increase very fast also, and the banks will get the advantage of PSL partnership. So I think you need to work, and I think Ramanji, we need to understand from you later on that how the 6 working days can be possible actually. And the roadblock, I think technology is one of the roadblock which need to be addressed. So I believe that in co-lending, one full session is required on technology. And and another roadblock, which the alignment between the management or the people who are on working on the process, so that that the process can be done fast also, and there should not be any gaps in the understanding actually. So this will also help to get it fast also. So with that, I would like to end this session. I would like to thank you to all of you for making it successful and being with us. Thank you very much, and thank you all. Thank you, sir. Thank you. Thank you, everybody.
Thank you, everyone. Thank you.
Thank you, sir. Thank you very much, sir. So nice of you, sir. बहुत अच्छा लगा आपसे.
Thank you.